Let's take a look at your markets now. Asian shares were weaker as also worries about the Chinese property sector continued to weigh a little bit there. Japanese investors sold off solid chip stocks after their return from an extended weekend as well. In Japan, the Nikkei losing nearly 1%, the Hang Seng in Hong Kong down nearly 0.5%. In China, though, on the mainland, the Shanghai Composite Index down just a fraction. Okay, let's look at how Wall Street closed yesterday, closing very little changed as market participants looked ahead to the Federal Reserve's rate decision tomorrow, so no big bets ahead of that. The Fed is expected to leave key interest rates unchanged. The S&P 500 gaining a fraction, the Nasdaq Composite also a very small fraction. The Dow Jones Industrial Average rose 0.02, so very minor movements across the board. Okay, let's bring it home. The JSE All-Share Index basically flat this morning. Global markets also looking for direction today. The JSE in London has been slightly higher, but the DAX in Germany fractionally in the red. Oil prices continue to push up, with Brent crude hitting $95, its highest since November last year. There have been concerns, of course, about production cuts done by Saudi Arabia and Russia pushing up those prices. The big focus of the markets this week is central bank meetings. Traders seem to be avoiding those big movements before then. On Thursday, the Reserve Bank locally likely to keep interest rates unchanged, but investors will look for clues about the future, and the Fed making that much anticipated announcement tomorrow. All right, let's take a quick look at the indicators. The All-Share Index currently up to 74,079. Industrials up 1/3%. Financials up almost 0.5%. Gold is trading at $1,935. Platinum at $940 an ounce. And there you'll see Brent crude oil that is in focus, hovering around $95 per barrel. The Rand trading at 18.93 to the dollar, stronger than the opening, which is just above 19 Rand to the dollar. It's 23.45 to the pound and 20.25 to the euro. All right, let's bring in Gary Boyson from Rand Swiss. Great to have you with us, Gary. So the US Fed Reserve, that's a decision tomorrow. Expected no change, but of course it's all about what the Fed says, and that could impact our Rand.
No, definitely. If you look at it, overwhelmingly the expectation is for unchanged. So we can look at the Fed funds futures, and there's a 99% chance we will not see an interest rate hike or cut tomorrow, that they're going to leave things flat. If we do see a hike, which I suppose there's a very, very outside chance that would be the direction it goes in, you'll see total havoc in the currency markets. If you look out to the November meeting, there's around a 71% chance we'll still be flat in November. The balance of probability saying that there could be a hike in September. And then finally, if we look at the December meeting, there's about a 60% chance currently that there still won't be any change. So we're starting to get the sense that, of course, all of this is very data dependent. We're going to be listening very closely to what the Fed chair says on Wednesday evening, just to understand exactly the direction of interest rates and whether there's going to be this final hike or whether it's done. And we're ready to start seeing cuts, hopefully in the first quarter, maybe the second quarter of next year. If we look at the Jackson Hole Symposium, which is the last real big I suppose, announcement from Jerome Powell, they really did try and, I suppose, telegraph to the market that we're going to have higher interest rates for longer. But if your inflation expectations are that we're going to see consumer prices coming down, or at least slowing significantly in the next little bit, if we're going to see commodity prices continue to moderate, and you have that expectation, then it's a reasonable expectation that we will see cuts next year. So it's all to play for, and obviously we'll be watching that meeting very, very closely, and it's just one of a number of announcements that are out this week.
So is it also a fait accompli that the Reserve Bank won't change anything locally?
Yeah, I think the idea is the same. I don't think we're going to see that. The Reserve Bank, at least the only central bank that will probably be hiking interest rates this week is the Bank of England. So it's penciled in for a 0.25% hike there, and that will likely be their final interest rate hike. Their inflation a little bit higher than the other economies that we're looking at. Of course, on Friday, Japan, which is the Bank of Japan, which is also going to have an announcement. That's a little bit of a wild card. No, I don't think anyone is quite sure what Japan is going to do on Friday. But from the Reserve Bank's point of view, obviously we're going to get South African inflation figures out. The expectation is that it's going to come in unchanged. So if you're looking at the core inflation number, which strips out energy and food, expectation is for 4.7%. Headline inflation is expected to tick down slightly, but overall, after that inflation data, it's going to be listening to what the governor has to say and what we can gather from the future path of interest rates that's really going to concern financial markets.
So the bank always talks about inflation risks. I mean, how much of a risk is the oil price becoming, now hitting $95 and just tell us what's at play there, what's moving oil markets?
A massive risk. So that's not going to feed into the core numbers because that's obviously stripped out. But energy prices are just so crucial to everything that we do. Every item of food that you buy in the shopping, in the supermarkets, or anything that has to be transported has oil as an input cost, has energy as an input cost. So we had some comments from the Saudi energy minister just saying that he is in favor of the production cuts that have been extended by both Russia and Saudi Arabia. That's helping to curtail supply. It's tightening up oil markets, and we can see that being reflected in the underlying price. As you said, Brent crude oil back to $95 a barrel, kind of knocking on that $100 a barrel level again. And it's been a steady rise since early July. So, a lot at play here. I think if they're calling it correctly, and we do see these interest rate hikes starting to constrain global growth, and we see, we've got all sorts of concerns in China around their real estate market. And if we see growth starting to stall in China, many of the big international banks have Chinese growth below that 5% level, which is quite key. Then, the constrained supply from OPEC Plus will make sense, and then you might see oil prices moderating. But if we see economies still managing to swallow these interest rate hikes and production still ramping up, and we see the unemployment in the US remaining fairly low, then we're going to see a much tighter oil market, and we're going to start seeing that price really pushing up aggressively.
Gary, let's bring it home again. So looking at the US Fed Reserve tomorrow, you said investors will be looking for clues as to when the next rate hike could be. If and when, is it going to happen this year? If there are signs of that, just explain the link then to our currency, which has already had a bit of a dismal year overall.
For sure. So there's always, every currency pair has two sides. So if you're looking at the US dollar, South African rand exchange rate, of course, what happens to US dollars matters, and what happens to South African rand matters as well. So what happens in the US matters, and what happens at home matters as well. So if we do see the Fed starting to cut interest rates aggressively, that means that the price of money in the US is going to be lower, and people will see relative value in something like an emerging market currency like the South African rand. So if we see a dovish Fed, or say a Fed that is inclined to cut interest rates on Wednesday evening, you're probably going to see a little bit of US dollar weakness. That's going to make our exchange rate look a little bit better. There's also probably going to be a little bit of excitement around just emerging markets in general. Their yields are a little bit higher. If your expectation is that developed market interest rates are going to fall, suddenly traders start parking cash in emerging markets, and that does tend to strengthen all emerging market currencies. And because the rand is as liquid as it is, you probably will see some sort of portfolio flow into our environment, and that again could easily firm up the currency. I was reading one of the bank reports, and they still have the fair value on the the US dollar South African rand exchange rate at around 15. Wow. So significantly stronger from where we are now. But of course, there's all the domestic factors as well. So the idea that we are seeing a weakening of our fiscus, the idea that we are still in the grips of an energy crisis, and if we can't get economic growth because of power constraints, that is going to be a material risk. It's going to increase the risk premium within our currencies. So, obviously there are local factors that we can't ignore, but a lot of this stuff does come from overseas too.
All right, thank you very much, Gary Boyson from Rand Swiss. So 15 Rand to the dollar, if that's fair. 19, I would say, is pretty unfair. That's where we are at the moment in terms of the Rand, just looking ahead at a bigger week for interest rate announcements.